Hello, friends, and welcome to this week's edition of My Radar. This week, I have three stocks on my radar. First is Axis Bank. Now, as you can see, Axis Bank rallied nicely from 600 levels to about 970 levels, and then had a pullback of about 16%, and now has formed a nice cup pattern and has seen some consolidation here with fairly average volumes. So when it breaks out of this, I will initiate a position on this with a stop loss somewhere around here, around 900, 910 levels. Now, which is about 8 to 8.5% from the entry point that I'm aiming at. I usually don't like to go beyond 8 to 9% of stop loss because that does not provide a fair risk reward. So if I'm able to enter around 990 to 1000, I would take this trade with a stop loss around 900 to 910. If you look at the bulk or block deals, you might have seen a news that Bain Capital has offloaded part of their stake in Axis Bank. But friends, that's not a very concerning news because about 80+% of banks' shareholding is by FIIs and DIIs. So there's nothing to worry about one of them offloading part of their stake, which has been absorbed by other set of financial institutions. There is not a major change in terms of their quarterly holdings by the institutional investors. So from that aspect also, it's a tick for us to proceed with the trade. Is Ultratech Cement. Now, if you see during March of 2020, when there was a large sell-off, the stock had touched a low of around 3,000, after which when the markets rallied back, from this point where we can consider it as a breakout point, it has rallied about 75% before it faced a major retracement. And now, from that point on, from let's say November of 21 till about last week, it formed a nice cup pattern, and now we can see some bit of consolidation happening here with again not very high volumes. So I would like to see a bit of consolidation here before I initiate a position. I would be initiating a part of the position here once I see a decisive breakout from here. I will initiate the full position. For now, going with my usual stop loss limit, I would be setting a stop loss somewhere around 7,600, 7,700 levels, which will be around 8.5% again. And once I see a rally from here and a pullback briefly, that I will use that as an opportunity to scale up my position. Now, from the other dimension, Ultratech Cement belongs to a sector which is going to be in focus from government policy point of view, where the emphasis is on infrastructure development. So the cement stocks are getting a lot of traction, and as part of that, I will also have this stock on my watch list as well as partly on an execution list. Tube investment. Now, this stock formed its earlier base between January and July of 2022. It was about 27, 28, 29% base, after which it rallied for about 50% from that point before it started sort of consolidating and had a pullback. Now, from December 2022 till about last week, it formed a cup pattern with a depth of about 22%. And now for last couple of sessions, it is trying to break out of the previous high, but hasn't been able to. So I will initiate a position once it is able to break out above the previous high, that is around 3050 level. Again, however, since it has been on the uptrend for last couple of sessions and about 6% gain in last couple of sessions, I would like to see a bit of consolidation before it breaks out of this level. So I'll be initiating only partial position here with a stop loss around 2760 levels and entry point around 3050 level, which will give me a stop loss of around 9%. And if it consolidates here and breaks out, then I will initiate or rather scale up my position once it breaks out of this level. Or if it doesn't consolidate here and breaks out straight away, then I will wait for it to show a pullback and then break out again so that I can scale up my position at the next breakout. That's all for now, friends. If you learned something valuable, please give a thumbs up. Please do subscribe to our channel and share it for maximum reach, and have a profitable and risk managed trading. Thank you.